everyone, welcome back to our channel. If you're new here, please subscribe to our channel, where we simplify the world of finance, tech, and especially crypto. Today, we're diving into a hot topic: how to successfully navigate the often volatile cryptocurrency market. Whether you're a beginner trying to figure out the ropes or a seasoned investor looking to refine your strategy, this video is packed with expert insights that will help you stay grounded in this ever-changing space. Let's get started. Number 1. What makes the crypto market so volatile? We all know that the cryptocurrency market is volatile, but why exactly is that? What makes crypto so much more unpredictable than traditional markets like stocks or bonds? First off, unlike stock markets, the cryptocurrency market runs 24/7. There are no closing hours or breaks for weekends. This means that events across the globe at any hour can significantly impact prices. A tweet from a major influencer, a regulatory announcement from a government, or a technological breakthrough can move the market dramatically and immediately. Crypto's global, decentralized nature means that no single country controls it, but the market can be influenced by geopolitical events. For instance, regulations in China or the United States can trigger a cascade of price fluctuations worldwide. On top of that, the market is relatively young, and liquidity can be thin in comparison to traditional markets, making large buy or sell orders capable of shifting prices. Speculation is another major factor. Many traders in this space are here for quick profits, jumping from one hot coin to the next. That speculation can fuel massive price swings as people rush in and out of positions. Number 2, the role of market sentiment and emotions. Now let's dive deeper into something we've all experienced: emotions. In a highly speculative market, sentiment plays a huge role. Unlike stocks, where companies have earnings reports and tangible assets, many cryptocurrencies rely on belief. And belief can change fast. Let's talk about two key emotions: FOMO and FUD. FOMO, or fear of missing out, drives people to buy assets when they see others profiting. This is how bubbles form. You've seen it. Bitcoin rallies to an all-time high, and suddenly everyone's jumping in, pushing prices even higher. But then comes FUD, fear, uncertainty, and doubt. When prices start to drop, panic selling often follows. This leads to even more downward pressure, driving the price down further. While this is common in many markets, it's especially pronounced in crypto because of the market's youth and its retail-dominated base. The key to staying level-headed: avoid letting emotions dictate your actions. If you can separate emotions from your strategy, you're already ahead of the game. Number 3, supply, demand, and market structure. Next up, let's talk about market structure, specifically supply and demand, which plays a fundamental role in determining the price of any cryptocurrency. Take Bitcoin, for example. Its supply is capped at 21 million coins. Unlike fiat currencies that governments can print more of, Bitcoin's supply is finite. This scarcity is one of the main reasons why people see Bitcoin as digital gold. But scarcity alone doesn't drive prices. It's the balance between supply and demand. When more people want to buy Bitcoin, but the supply remains limited, prices rise. On the flip side, if demand drops or if people start selling en masse, prices fall. This supply and demand relationship extends to other cryptocurrencies as well, though some tokens have much higher or even unlimited supplies. For these, demand plays an even more significant role in determining value. This is why you see altcoins rise quickly when they capture the public's attention, but they can also plummet just as fast when interest wanes. Number 4, regulation and its impact on crypto markets. Now let's address a major driver of volatility: regulation. Governments and regulatory bodies around the world are still trying to figure out how to deal with cryptocurrencies, and every time there's a major regulatory announcement, the market reacts. For example, when China banned crypto mining in 2021, Bitcoin's price dropped dramatically. But when countries like El Salvador adopted Bitcoin as legal tender, we saw a surge in optimism. Regulation brings uncertainty because it can change the rules of the game overnight. And in crypto, uncertainty equals volatility. But here's the thing: while short-term traders might get spooked by regulatory news, long-term investors often take a different approach. Number 5, expert strategies for managing crypto volatility. All right, now let's bring in some expert advice. How do you manage volatility? Let's hear from some seasoned professionals in the space. My first tip is simple. Always use stop-loss orders. These are automatic sell orders set at a specific price to limit your losses if the market moves against you. Let's say you bought Bitcoin at $50,000. If it drops to $45,000, a stop-loss would trigger, selling your position before the losses get worse. This is a great strategy to use, especially in volatile markets where prices can drop sharply overnight. Diversification is key. Don't put all your eggs in one basket. In crypto, that means holding a mix of assets: Bitcoin, Ethereum, stablecoins, and maybe even a few smaller altcoins. By spreading your investments, you're reducing the risk that any one asset's volatility will ruin your entire portfolio. Diversification is often considered a foundational principle in investing, and it's especially relevant in crypto, where certain assets can experience wild price swings. I also recommend doing your own research. In crypto, things move fast, and while social media can help you stay informed, it's crucial to understand the technology behind the coins you're investing in. Look for projects that have real-world applications. Ethereum, for example, powers decentralized finance and NFTs. Those use cases give it staying power. That's a great point. Understanding the fundamentals of a project can help you make more informed decisions and invest in assets that are more likely to succeed in the long term. Number 6. Tools and tactics for surviving a bear market. Now, let's discuss what to do when the market turns bearish. If you've been in crypto for a while, you know that the market goes through cycles. There are bull markets, where prices skyrocket, and bear markets, where prices fall, sometimes dramatically. First, don't panic. Remember that crypto is still a young market, and downturns are part of the game. One strategy to consider during a bear market is dollar cost averaging, or DCA. With DCA, you invest a fixed amount of money at regular intervals, regardless of the price. This reduces your risk of buying in at a market peak and smooths out your entry price over time. It's a strategy that works especially well in volatile markets, where prices can drop sharply before recovering. Another tip is to hold a portion of your portfolio in stablecoins during uncertain times. Stablecoins like USDC or Tether are pegged to the US dollar, which means they don't experience the same wild price swings as other cryptos. By moving part of your portfolio into stablecoins during a bear market, you can reduce your exposure to volatility and preserve your capital for when the market turns around. Number 7. The future of cryptocurrency, a long-term perspective. So what's the long-term outlook for crypto? While we've talked a lot about volatility, there's a bigger picture to consider here. Many experts believe that while the market is volatile now, it will stabilize over time as more institutional investors get involved and as blockchain technology matures. We're already seeing major companies like Visa and PayPal adopt crypto, and governments around the world are working on creating digital currencies of their own. Long-term, many predict that cryptocurrencies and blockchain will revolutionize industries like finance, healthcare, and supply chain management. This growing adoption could bring more stability to the market and lead to long-term growth for the most promising cryptocurrencies. If you enjoyed this video and want more insights on crypto and finance, don't forget to hit the subscribe button and ring the notification bell. And as always, drop your questions and comments below. I'd love to hear your thoughts. Until next time, stay smart, stay informed, and keep navigating the crypto waters with confidence.